Welcome back, traders. Today, I want us to look into the time frames that we use when analyzing the market and finding our possible trades to execute in any given pair you find yourself, literally any pair you find yourself. So straight on, you can see that time frame. You can see that I have the weekly, daily, 4 hour, 3 hour, 2 hour, 1 hour, the 45 minutes as well, 30 minutes, 15 minutes. 10 minutes, 5 minutes, 3 minutes, 2 minutes, 1 minute. I literally added all the time frame because sometimes I just scale through them. Mostly when I'm studying. I don't do that like when I'm looking for my trade to execute. So I literally have all this time frame here because when I'm analyzing, especially when I'm back testing and refining my strategy where I trade, I literally take many of the time frame because at that point I'm just studying. You get so now straight on. When we talk about, let's start with the lower time frame. When we talk about the 1 minute, 2 minute, 3 minutes to 1 hour, let's say 1 hour. We literally using the lower time frame, which is mainly used by scalpers in the market. And what does scalpers do? Scalpers are traders that just get in the market and leave within an hour. They don't stay more than 5 hours. Too long, let's say 5 to 8 hours, but that's too long for a scalper because scalper mainly depend on 30 minutes, 1 hour. 1 hour is kind of higher time frame, so they depend on 30 minutes, 15 minutes, 10 minutes, 5 minutes to look for their quick trade to scalp and make money and leave the market immediately, right? So that's what mainly scalpers do. Then when we talk about the higher time frame, when you talk about 1 hour and above, 2 hour, 3 hour, 4 hour, daily and weekly, we are talking about the swing traders and the day traders. Those are the time frame that they use when analyzing the market. You get, and when deciding which time frame you really want to pull yourself, it depends on the strategy that you learn, who you learn from, and how you really want to keep yourself as a trader. And as a trader, before you ever call yourself a trader, you really want to keep yourself in that niche of what you are. You either be a scalper, you either be a day trader, and you can be a swing trader. And as for me, I'm a swing trader. I swing trade, and we are currently swinging Euro AUD, which I shared with my people on my Telegram. You can see where I showed my entry, and this is when I share the trade with them. You can see my analysis and what time frame are you seeing here. You can see that we have the 4 hour time frame, and this was the entry of our current trade that is running. You can see the entry. I share my trade live. If you're not on my Telegram, you can check the link on my bio to join my Telegram. I can still drop it on the comment section for you to check it out and join it here. So we're currently swinging this Euro AUD, and this is a swing trade entry and executed with higher time frame. I personally use the higher time frame, and as a day trader, a swing trader, you really want to depend on the higher time frame. When you talk about scalpers, you can focus on the lower time frame as well, which is still good. And when I trade, I use the from okay. When it comes to me analyzing the market, I start with the weekly time frame, and I really want us to use the Euro AUD that we're currently swinging as our example so we can understand it. You can see I'm currently on the weekly time frame, and if you can see on the weekly, you can see a bigger picture. You can see 2022, 2023, 24, 25, 26. You can see how you can just see them in the higher time frame. And are we on this weekly time frame to look for trade? No, we just want to identify the direction of the market before we can even know what we have to do in the market when we go scale down to the lower time frame. And you can see, if you watch the higher time frame, you can see that this move that happened here. If you want to take the last side that was being taken out, you can see this was the last side that was being taken out by the market. This was the full high that was being taken out by the market on the weekly time frame. And if you scale down, now you see, I just use the weekly to take the last side that was being taken out, and obviously the low that market was coming from. But is not important on the weekly. The weekly is just you using the bigger time frame to see where market is at, the high that was being taken out, like the full bigger picture of what market did on the higher time frame. Then analyzing as a scalp, as a swing trader that you are, you really want to focus mainly on the daily and 4-hour time frame, which is where I trade. And as a swing trader, daily day trader, that is the main time frame that you take. So on the daily time frame, you can see we still have the bigger picture. We can see from 2023 to current date, right? So that's what we can see on the daily time frame. Now we have to find our trade entry from the daily time frame, and from the daily time frame we have to go straight to currently what market is doing. We want to go straight to what market is currently doing, because whatever you are doing in the market, you are focusing more on what market is currently doing, because that's where you're making the current decision of either you're buying or selling. Whatever you are doing, it always comes from you analyzing and first of all understanding the direction of the market. Now look at what we have here. You can see that on the daily time frame, take a look. You can see that this was the last high that was being taken out on the daily time frame. Forget about what we did on the weekly time frame. That was not important. Weekly is mainly when you want to, like, it's just like on the weekend like this, you want to study, you have to like go from weekly to go down, because that's what you have to do. You're not trading on the weekend and you're on your back test time, you are refining your entry. So you have to go check all those time frame and understand how your strategy works in those time frame. And since I've been trading and how I understand the market, if you are not a scalper, please don't use the 45 minutes to 1 minute. You see, from 45 minutes to 1 minute, if you're not a scalper, I don't really recommend you being on those time frame. I have it here because those are time frame and I need to have it there so I can study them on my free time and on the weekend, so I can study them. But when it comes to me finding my trade and my next possible trade, I only use the daily and 4-hour time frame. That is what I use as a swing trader that I am. And now let's study this current trade that we're currently swinging. You can see that this was the last side that was being taken out, and if you zoom in, you can see the market didn't take it out with this current week. If you'll be following me, you know what we talked about this week candle. It is never a direction break. If you have a week like this as your first break, let me zoom in. You can see that this was the last high. This is a daily time frame, so each highs matters. So you look at this high is here. You can see this black candle before this purple candle is a high. So we mark it out. You can see that market took it out with a wick from this first move right there that you can see. Market took it out with a wick, and it's not important. That is not what you need. What you need is a full body break. So as you see this week, you just patiently just wait and see what market will do. And you can see the market took it out again with a full body. You can see when market came back after this reversal came down and it started going back up, market took it out with a full body again before it started coming down again. And what happened there? Market took it out full body and came down to react from a low down here, which is a key level. A lot of trade, they call it key level, for you to see on the higher time frame, so that you can scale down to your lower time frame to then find your entry. Now look at this key level the market respected on the daily time frame right there, which is this zone. Market reacted from it, and then you've already understand. Let me take out this, guys. I only want to break this thing down so that you guys can really get what I'm saying. Now market reacted from this key level from the daily time frame. Then you have to go down to the 4-hour time frame to now find your entry. You already have your key level. You already saw where the high the market took out last. Then it reversed down to respect a key level on the daily time frame, which is this key level right there. And then what do we have next? You can see that there's another high here. The market took out with a full body, and immediately market took out this market with a full body. You saw a reversal coming down. First thing first was that it created a liquidity. We have not really talked about liquidity. I'm sure most of you should be familiar about liquidity, and I'm still going to break it down here on this YouTube channel. So you see this guy here is what we call liquidity. The market took it out, but it came down, created this liquidity, and reversed back to the upside. Then before coming down again to this zone that we executed our trade, and we're currently running in blues, right? Exactly. This liquidity always align with whatever you are doing. Just like you want to make sure that you have the current break of structure, understand where market is coming from with the daily time frame and weekly time frame. You want to understand where price is coming from, and then using your 4 hour to find your main entry for you to execute. And you can see within me using this time frame, you did not see me go down to the 1 hour time frame. Yes, even if at the 1 hour time frame I can still use it as well, but the 1 hour time frame, what you can see, it kind of have a lot of noises. You can see that this place, you can see that we have obviously a low and another low here. And if I was to use the 1 hour to take this trade, I would really want to consider market grabbing this low and this low, meaning that my entry should be below like this, so the market will take out all the low and I will be free to take the trade, making sure that there's no longer low that looks like a threat that market needs to go grab, right? So that is 1 hour for you. And you can see if you go down to the 30-minute as well, you have a lot of noise that you have to pay attention to. Look, and you see, I want to show you guys something, a quick something here. Let me take out all the drawing that we have here, show you the difference between those time frame. You can see on the 30-minute time frame, we have multiple candle here that pushed up to the upside, right? You can see we have up to, like, let's count from this low. We have like up to, this is over 10 candles that push that go to the zone. This is over 10 candles, right? And if you take the 1 hour candle, you can see it's less than 10 that got here. If you take from here, I didn't count it, so don't mind how many count in case you count. It's less than 10. Then if you go to the 4 hour time frame, you might literally just see less than 5. You can see 1 2 3 4 5, 1 2 3 4, and it's currently doing the 5, right? You can see how using the lower time frame you get more noise, you get to see more noise in the market, meaning that a lot of candlesticks that you're going to deal with, right? That is the lower time frame. And the higher time frame, you get to see more of less candle to deal with, and you get to make your decision clearly with the higher time frame without having a lot of noise of the lower time frame that you have to pay attention to for you to get your trade entry now, right? So that is it. And I always love the 4 hour. The best time frame that I recommend when trading, I recommend the 4 hour time frame and the daily time frame. That is if you are swinging trading. And I will only recommend what I trade. I will only recommend the type of trade that I take, which is swing trading, and I trade the 4 hour and daily time frame mostly. No matter the decision I'm making in the market, if that decision is not applying on the 4 hour and daily time frame, I don't take trades like that. I mostly skip them to make sure that I wait for that 4 hour clean trade that I always execute. Well, I feel it's more important to use the higher time frame because first and first you get to trade less than the lower time frame. The lower time frame, you have a lot of noises and you get a lot of opportunity to trade. Yes, so higher time frame give you minimum trade quality trade, a trade that have the quality more than the lower time frame that give you quantity. You take more trades on the lower time frame, more like the higher time frame that your entry, you have to wait for your entry to come to you for you to execute and for you to use the 4 hour daily time frame. You're giving yourself that discipline to trade 1 to 3 times in a week, because there's no way you're trading higher time frame and you get to see multiple entry. It depend on your entry model. We have the order block and every other model. They also have the FVG as well. So there's always this model that is in the market that people trade, even using the higher time frame, but the lower time frame, no matter the time frame, there's always this edge, which is the last. What do you trade? The model you trade must always be there for you to take your trade. And you can see right there, what I have here is simple. And QMR market took out this last low, then this is the last low. After taking out this last low that I marked out my entry from, let me take out this guy. I don't like to mark it out. You can see market, this low has been taken out by this low, which is how I got this my QMR that I marked out. And if you Fibonacci to, just like I taught you guys, you flip from this low to this high, you can see your Fibonacci saying that your liquidity is sitting at a 50% of your Fibonacci level, giving you that Fibonacci and liquidity confirmation of your trade, right? So that is it for the liquidity and it's done. Going back to the time frame, just like we're discussing, mainly focus as a swing trader, a day trader. As a day trader, so I think the 1 hour is also valid, depend on the if you cannot find your entry, but finding going below 4 hour is not really something for me. You see the way I got my entry on the 4 hour, what I can just do, maybe I'll just go to the 1 hour and I'm going to see same thing. So mainly what I use the 1 hour for is, after I get my trade confirmation from the daily and 4 hour, I just use the 1 hour to just look at the 1 hour, not even using it to analyze. So sometimes when I go to the 1 hour, I get to see, like, you see this low, then I'll be like, okay, let me just wait for the market to still go down a bit. And many times I get to miss the trade. But with the 4 hour, you just execute, protect your zone, and wait for your target, and you exit the market just like we did here, guys. So you can see those time frame is very important. You must use them correctly for you to get your good trade and execute perfectly. And also, just like I said, scalpers use the daily time frame to identify where direction is coming. They can use the daily time frame and 1 hour to identify where market is coming from. Just like you as a swing trader use the daily to identify market, they can also even use the daily time frame. But I feel like them using the daily time frame is just like us using the weekly time frame to just look, because we are not using the weekly to trade. We just want to look the weekly time frame, then we scale down to 4 hour to then find where market is coming from, which is like how we figured there. We use the daily to figure it out where market is coming from. You can also use the 4 hour, which is the 4 hour is so much the green time frame. To me, the way I trade, 4 hour is like the green time frame for me. No matter what I'm doing, just the 4 hour and daily is all I need in this market. If they are to say, okay, delete all your time frame and just choose one or two, I'm going to delete everything you see on my time frame here, and I'm going to leave the 4 hour and daily time frame, because these are the green zone for me as a swing trader, and the zone that I focus more, and I'm gonna convince to go in any other time frame apart from these two time frame. And if you watch, I have multiple pairs on my watch list, so I'm so much comfortable waiting for that 4 hour and daily time frame to execute, because having this multiple time frame, you have to take them all, you have to analyze them all, you have to be so much active that you don't miss the next move, because literally in a week as a swing trader, you might even just find yourself taking one trade or two trade, and then the week is gone till the next week. More like a scalper that get to see up to 5 to 10 trade a week and get multiple entry and make more money. Even if they get to see more opportunity and lose more money, why make more money? You see less trade, you take more quality trade, make money, as well, even if the loss will also come. But at least it's more masked, is more controllable than a lower time frame that have many structure that you have to look out for and keep executing more than you should in a week. Also, it also depends on the rules that are guiding you in trading. You get, so if you are the type that want to like get up to 5 trade in a week, each day you want to trade 5, it's okay as a scalper. But swing trader, is that okay? Even as a scalper, do you need to trade multiple times? This is me sharing the knowledge the way I know. I don't think it's so much important to trade every day so that you get 5 trade a day, 5 trade in a week. I think it's more making sense and more important if you can control what you do in the market. More like, I need to get this money out of the market before the week run out. You get me? Using that mentality of, I need to get the money out of the market before the week run out. I need to get up to 4 to 5 trade before the week run out. It's kind of no go zone for me. I even prefer not taking a trade in a week because my type of trading come at, when I see my pattern of trade, I always execute. I always press lot and raise the trade. Sorry, when I say press lot, don't confuse me. I'm not over leveraging my account. What I do when I talk about that is that I always risk when I get my entry method. I don't let it slide. I always execute because that is what I trade, and I hardly see them in a week. In a week, 1 to 3 trade. You get, so when I see them, I always want to execute. Now you get my points. What I mean about that, and I hope that this time frame, just like I said, explain also makes sense to you. And if you're a swing trader, focus more on the 4 hour and daily time frame. Then weekly is mainly if you want to study. Don't You can just like you watch you can just, if you have nothing doing, you can just use the weekly to see how it aligns with what you're doing. And I want to do something here, guys. You can see on the weekly, you can see that what you just can just see, you're just seeing the candle, one candle just going. So identifying that high with weekly is if you are already a professional trader like me now. If I go to the weekly time frame, I already know that each high that I'm seeing, you can see that this move that happened one, and this move one, and this move one. You can see this high, this high, this high, this high of each candle moving here. In the weekly, I call it a high that have a chance. Sorry, I call it a high because if you go to, is a higher time frame, and if you go to the daily time frame, you will see it more clear that okay, that is a high. You can see. So weekly is like a bigger time frame that you don't even want to pay more attention to, except you want to study. You are just studying. You just want to check what's there. That's how you go there. Then you come down back to daily time frame and 4 hour to find what you really need in the market before you execute your trade. That's just how simple the time frame works. My recommendation stays with 4 hour daily time frame. That is the best time frame for me, and I recommend to you guys. And you can see how we're using it to swing our Euro AED, and it's currently moving. Many more trades on the channel. Join my Telegram channel. Many more trades on the channel, and that's like that, like that. That is just how it works, right? So thank you guys for watching. Don't forget to give me that thumbs up, subscribe to my YouTube channel, and let me know the next video you love me to drop. See you in the next video, and peace out.